Hello everyone, here are the latest market news on November the 2nd, 2020. Ant Group attracted an unseen $3 trillion in IPO. Retail investors have filed for an initial public offering of Ant Group Co Ltd worth $3 trillion, the equivalent of the United Kingdom's gross domestic product. It will be the largest in the world as family investors are betting on their demand in China. Investors, both retail and institutional, are rushing to buy Ant despite the risks of scrutiny at home and abroad. They brushed off any fears in hopes of capitalizing on the rapid digitalization of financial services in China. Ant's dual listing should raise about $34.4 billion, which is fairly even between Shanghai Star and Hong Kong. The Shanghai IPO round attracted around 19 trillion yuan, $2.8 trillion in filings from retail investors, more than 872 times the number of shares held by them, the company said on Thursday. The Hong Kong tranche received 1.3 trillion Hong Kong dollars, $168 billion, 389 times more than on Friday. Inspire Brands buys Dunkin Brands for $10 billion. Inspire Brands Inc. will buy Dunkin Brands Group Inc. for $8.76 billion, the two companies said late Friday, bringing chains such as Arby's and Dunkin' Donuts together in one of the largest restaurant deals. Inspire Brands, which owns Arby's, Buffalo Wild Wings, and Sonic Drive-In, said its cash deal to privatize the owner of the Dunkin' Donuts and Baskin-Robbins networks will cost $106.50 a share. This represents a nearly 20% premium over the last Dunkin' share price at the close of trading on October the 23rd, before the deal was first reported. Including debt, the deal is valued at about $11.3 billion. Dunkin' and Baskin-Robbins' sales improved from their indoor loss in recent weeks thanks to strong demand from their business. On Thursday, Dunkin' and Baskin-Robbins reported unexpected gains in third-quarter U.S. LFL sales. Chevron and Exxon lose half of their value in 2020. U.S. oil majors Chevron Corp and ExxonMobil Corp are aggressively cutting costs in the third quarter in an effort to offset weak fuel demand trends caused by the COVID-19 pandemic. U.S. oil prices have dropped 41% this year as billions of people have been locked out by the coronavirus. Exxon posted its third consecutive quarter of losses on Friday and cut its spending plans for next year. Like others in the sector, they are cutting a significant portion of their workforce and expecting to cut costs even further. Exxon shares fell 1% on Friday at $32.62. Chevron shares rose 1% to $69.50. Exxon shares have lost half their value this year. Chevron shares fell 40%. Chevron, the second largest oil producer in the United States, earned $201 million in the last quarter compared with $2.9 billion in profit in the same period last year. Exxon reported a loss of $680 million, the third consecutive quarterly loss. China's production rises to a 10-year high. Manufacturing activity in China accelerated in October to its highest in nearly a decade amid rising domestic demand, a Caixin market study showed on Monday. The Purchasing Managers' Index for China's manufacturing sector calculated by the company was 53.6 points in October after 53.0 in September. Analysts had expected the index to remain unchanged in October. The 50-point mark separates the increase in activity from the decline. The October PMI was the highest since January 2011 and was about 50 points for the sixth straight month. Official data released on Saturday indicated a slight slowdown in activity growth in October. The PMI index fell to 51.4 points from 51.5 in September, according to the National Bureau of Statistics of China.